Hi, Ira Quinner here, President and Founder of Triathlon Partners. Thank you very much for watching this episode of Triathlon TV, where we will be discussing what's going on in the markets today. Stocks have sold off quite aggressively. The S&P 500 is down 2%, and the Nasdaq is down 3%. Now, this has all started because today there was some data released. The ISM Purchasing Managers Index and construction spending were both down for the month of August. Those very concerned, there are big concerns now about the economy slowing down. Now, this is something that we spoke about before, that the focus of the Fed is going to be not on inflation, and it's going to be on the jobs number and the state of the economy. And this, I think, is a proof that the market's very worried about it, because a slowdown in the economy would mean that they would be able to lower rates. But however, that's usually good for some stocks, but the entire market really is down, except for real estate, consumer staples, and utilities. So the high-tech sector is down, healthcare is down, small caps are down 3%. So the market is focusing on what's good for the economy now, and not necessarily what direction interest rates are going in. That's because the market is really set that interest rates are going down. It's very convinced going down now. So let's talk about where rates are, because it's very important, because I know a lot of people want to have positions in fixed income. It's not as volatile as stocks, and we're having rates being lowered. So right now, the 5-year Treasury is yielding 3.65%, and the 10-year is yielding 3.85%. So let's just say 3.75 on average, and that rate is taxable. So we're talking about 7.5 years on average. So we have to sort of look out there, because a lot of people are going to be running for CDs or bonds for protection, because the equity market is coming off, but also it's part of their portfolio that they want. So I'm going to offer some suggestions here for people to look at, because there are other ways to play the fixed income market to get a high rate and to lock that rate in. Now, one of the ways to do that is through an annuity. This type of annuity is called a MYGA, MYGA. It stands for multi-year guaranteed annuity, and I want people just to focus on what it actually does. So this particular annuity by this issuer, who is A+ rated by AM Best, is a 7-year annuity. You have to keep the money in there for 7 years. The rate is guaranteed for the first 5, and that rate is 4.55%. And then afterwards, it's whatever the market rate is. So that 4.55 is 0.8 higher than 3.75, where the government rates are, and you don't pay taxes until after you take cash out of the annuity. So since it's a 7-year annuity, you have the gains earning interest for 7 years. So that's something to really consider if you're looking to have a safe investment. And this is particularly good for somebody who's over 50, just from the liquidity restrictions and possible penalties. They're very similar to 401k penalties. But these types of products can be continually rolled into other annuities, and therefore you can postpone taxes for a very long time. There are ways to take the money out. I don't want people to focus on an annuity is supposed to be something that pays me every year until I die for the rest of my life. That's not how all annuities work. Let's just focus on the investment part of this one. This one would pay 0.8% higher, guaranteed for 5 years. So this is something I want everyone to focus on when they think, oh, I want fixed income, I want a guaranteed rate. It's not always treasuries, it's not always CDs. Give us a call at Triathlon Partners. We can help you out. We'll sit down with your goals, figure out what's best for you, give you a good education about these types of products. All right, well, thank you very much for tuning in, everyone. Have yourself, this is Ira Coiner again, and have yourself a wonderful and blessed day. And the disclaimers are coming up. I know everyone really likes those. So take care. Bye.